Well, good day, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for the evening of Thursday, and we're at March 7th, 2024. Well, I want to start off with something. Honesty. I missed the move in the stock market in futures. I did not miss it in the video. I didn't miss it in the other individual things I was doing on the ETF side. But my work in the futures, by the time the buy signals kicked in the way that I chart, it was gone on me. And the same happened in the metals. These were vertical moves, and that is a laggard effect. Some of our work, it doesn't catch every single move, and that happens. Did I get short? Absolutely not. Did I get short in the metals? No, I didn't get short in the metals either. So I didn't get hurt. Let me put it this way. I did get hurt because I missed moves. And that's just honest. If you think you can catch every move, I'm not the guy for you because I can't. And I don't think anybody can. All right? But I think I do a fair enough job for everybody with it. So let's talk about what this is all about right now. It's interest rates. There is a race to see who's going to be the first in developed countries to begin the rate cuts, and then everybody follows. Now, certainly the world wants to see America go because then they all have the cover for them to go. I don't know that we'll be the first. It's doubtful the way that data has gone. Speaking of that, and then we'll come back to what I'm saying here, tomorrow you get a big number in the non-farm payrolls. Is it big? This is a market that likes bullish information right now. So a strong labor market, do you think that's bullish or bearish for the individual, for example, stock indices? For the individual stocks, it's probably bullish. It's how things flip around. Economists are expecting non-farm payrolls at half almost of what they were last time, of 353. Now they're looking for 198. They're not looking for much of a change on the unemployment rate, 3.7 versus the prior. And they're expecting average hourly earnings went up 0.2. They'll say, well, it's slowing. They're not jumping by big numbers. We're seeing new jobs coming down. That's good. Will the market consider that? Will the market want to take profits on a Friday going into the weekend? Your guess is as good as anybody else's, all right? Look at it that way. In stocks, what has happened, it's turned into a stock picker market more than it has the indices themselves. That's not saying on the future side they haven't gone up. But now there's the rotation going on. The MAG 7 is no longer a MAG 7. I mean, Apple just keeps falling. Tesla's got its own problems, but we'll talk about that when we get to the ETF. So let's look and see where we're at. Obviously, you're up 0.25% for the week. It feels like you'd be up dramatically. You're not. You are up 0.25% for the week so far. We'll see how we finish out. When you look at the chart, today was the first liftoff back to the old highs, basically, and you just got through them and you closed higher. So there's no arguing what you've got. You've got markets with higher lows, higher highs. It's bullish. The market is held all the way through the 18-day average of closes, and my rule goes this way. When the market's over the 18-day average, your bias is up. Therefore, you're looking for buy signals. Were they there? Absolutely. Did I miss them? Absolutely. Market against the Bollinger Band has stopped on each of these rallies, gets thrown back, but overall moving higher. And the question is, will you re-embed? Okay. You lost the re-embedded readings. Let me just show you this right here. First day you lost it, and second. You should not make a new high. If you go back and you look at the charts, you'll see that the vast majority of times when that occurs, you make a run towards the closest main moving average rather than go for the high. This market's full of tricks. This market did the exact opposite of that. It made the new high, and tonight, market's sort of just sitting here. But that's what it's doing. It could re-embed, but not tomorrow. It could do it as of next week. So we'll see if it can lock that in one more time or if it's just overbought. In the NASDAQ, you're nowhere near the same pattern. The NASDAQ has got a market that is staying over the 18-day average, had a nice correction, if you will, to it, and it just threw out, for me at least, the new buy signal today with the outside day higher. Now, if you take out today's low on Friday or Monday, the odds favor you'll begin more of a correction to the downside than a lot of people think. That's if that's taken out. Don't know if it will or won't be. The market that has been the weakest is the Dow. And it's been in a downtrend, but it doesn't appear that it wants to go to the lower Bollinger Band just yet. It too had an outside day, trying to get back to the upside. And it's been fighting a battle at the 18-day average, looking for direction over the past 4 days. Where the public is the public's bargain hunting into the Russell. Because the big numbers have gone, they're looking at stocks that haven't moved, and this is getting, as an index, buying. It's still in an overbought market. It's still against the resistance point, but that seems to be what's going on. I mean, when you get stocks that move 8-9% in a day, and you're looking, where's the other values I can get? That's what goes on. When we look at the 10-year notes, you're at a key resistance point. You're overbought. You've had a nice rally. The question is, can the 18-day average flip around and get over the 100? That would be a much more bullish situation. We'll see if it can do that over the next couple of days. That's what it would take. You're nowhere near it in the 5-year note. So you're at a resistance point with support at the 100-day average. If that gave ground, you'd go back, in my opinion, to the 18-day. In the dollar index, one more day like today, where you make a lower low than today. You close lower at the bottom of the range. I think traders will call that a downside breakout, and we'll see what the market then has in store. But you've done a lot of damage to the bull case. Remember, this market was rallying since the beginning of the year. It peaked out against the 104 area, basically. There was another count that if the market could extend this to the 106, didn't make that count. So now the market's sort of meandering around trying to figure what next, which means the euro goes up on that news. And why not? Miss Lagarde sounded awfully dovish to me today. She can say all she wants, well, the data's got to show it, but they're viewing the data as showing it. They just want more certainty. Those are her words, by the way, not mine. When you look at the British pound, everything trying to move against the dollar at this point. A lot of markets saying, okay, we're going to drop interest rates to spur our economies on, which will help. Bitcoin, you still have the embedded reading until that's lost. You're just pausing right here. It can at any time go again. Now, in the Brent versus the WTI crude, this is the difference in the prices. When you get over the 18-day average, it means that the Brent is gaining more than the WTI. When it's under it, it means they're trading more or less wherever that number is. Right now, it's about $4.50 premium. Here's May Brent. So I've switched over to the May contracts. Higher lows, higher highs, but look at, you keep hitting this resistance and stopping. Overall, the IEA today said that the market is very well balanced. They are looking for this market to still hold good values. I think the market's, an $80, $90 market right in there. That's what I'm guessing it'll be. And wherever that's at, well, now the question is 77.60 is support in WTI. Close under 77.47, and you put the market in a little bit of trouble. It might want to drop back into the $75 range. But remember, we are looking to buy the U.S. another 3 million barrels. When you look at gasoline, I finally made the switch over. I'm looking for this basing area to give way to the market starting to clear, the 257 level, and I'm looking for that spring-summer rally, looking for the buying condition to show up there. Let me just see. And this I've got the wrong title on. I knew I did a dupe here. I'm sorry. Right, let me get to this. This is the natural gas, and this is the May. Don't go by what it says up there. That's my mistake. In the nat gas, you have a higher high and a lower low. I knew I did that. I just didn't catch it. I switched over just 20 minutes ago to all these for you. Momentum down. I thought you might peak out up there. You heard me say that in these videos, and you're pulling back. So now I'm looking to see how do I get back in step with the market. Well, I'm certainly tonight not going to try to in front of the president's speech, in front of the jobs report. I'll maybe take the weekend off and then take a look at these markets good and hard come Monday again. That's what you do. It's like a ball player. You get out of step. Not every day do you bat 300 or something. So let me show you what we've got for you. As I missed the market, my firm's done pretty darn good. And if you'd like to see how they write about options, spreads, the futures markets, the cash markets, what they're seeing, the charts of the day, these are all the different offers. And when you go to iraepstein.com under free offers, or you move your cursor to the top up there, you just click what you'd want. You then put in your name and all the information here, and we get it out to you typically within a day or two, a business day or two of you doing that. So if you'd like to get this information, I think you'll find it very helpful, especially the chart work that we do. Pretty darn good. I don't think you'll find this in the futures market quite the way that we do it. I'm Ira Epstein. Thanks for watching. I'll catch you in the morning. Take care.